Hey guys, good morning. It is Sunday, April 28th, 2019. Hope everybody's doing well, having a good weekend. Of course, the market's closed right now, but just want to make a quick video on a little change in the indicator that I'm going to use or try out here. As you guys probably know from listening to my other videos and just watching them, even if I never commented, um, I'm not a big believer in indicators at all. As you can see, I only keep one on my chart. And quite frankly, the way I trade, I could do this and never miss it, squash it down here and never miss it, or delete it off my chart entirely. So, because I think the way I trade using fundamentals and Elliott Wave patterns combined, indicators, are no magic solution. They're all lagging. They all have flaws, and I don't see a whole lot of value in them. However, with that said, I do keep one on the chart, and the one that I was keeping was let's see, was this multi-period CCI. So this is a MetaTrader 4 platform, and CCI is available really in any platform, MetaTrader 4 or 5, it doesn't matter, you can find it anywhere. So this is a multi-period one. What all it is you take multiple CCI indicators and you just keep dragging them into this same window, and then it creates, and then you just change the time. So this is a 21, a 25, a 30, 35, 40, 45, 50 CCI. It defaults, I think, to 21 or 14 when you load it. So all you do is you just dump them in here. You just keep going into your indicators, and you just drag and drop it into the same window, and then you just change the time periods for each one, and you get this, what it looks like this, and you can change the colors to suit whatever you like. And this is a good indicator to show you trends and corrections. The basic theory is, of course, you can use it for divergence, but the basic theory is when the lines are compressed like this, that indicates more of a trend, and when they're going down spread apart or up spread apart, but basically spread apart, that indicates more of a corrective move. But I really haven't been using it really much at all. And so I wanted something to kind of help me maybe a little bit with confirmation of when I see an Elliott wave pattern to say, okay, I can see this pattern very clearly on this chart. This is in a wave 5 starting. But I'd like to have an indicator that maybe would also give me a tertiary or at least a secondary guide for when that trend might be ending. And really, it's about just using divergence. And I didn't feel the CCI was really the best one for that. So I'm going to put this one back on. So this is the Awesome Oscillator, it's called. And it is available in your MetaTrader 4 package. If you go to your indicators folder, and you go to the Bill Williams one, it's right here. Okay, Awesome Oscillator. And so in any of these MetaTrader 4 or 5, and probably any trading package you have, will have this indicator. It's not proprietary. Don't pay for it anywhere because it's a free indicator. Okay, so basically, again, it's an oscillator, so it's measuring price momentum. And when you first put it on your chart, I changed the colors. So when you first put it on your chart, the value up is going to be green and the value down is going to be red. I changed it to the same color, to this dark turquoise, but when you initially put it on your chart, it basically looks like this. Okay, where if the price is more positive, the lines are green, and if it's more negative, it's red. And I have these backwards. I knew that didn't look right. But it doesn't matter. I'm not going to leave it like this anyways, but I just wanted to show you when you first put it on your chart, this is what it looks like. Okay, so when price is kind of trending up, the bars are going to turn green, and when they start trending down, they're going to turn red. But I don't care about that because I'm not using this for trade signals, and I would never take a trade based on these bars turning green or red. You will suffer a lot of losses if you do that. And that's not the way you use this, especially since it's an oscillator. So I'm going to go back and change them back to, and you can, of course, make whatever color you want. I'm going to change it back to the dark turquoise, but I just didn't want green or red. So any other color but green or red. So, and so basically what this is, like I said, it's a momentum indicator. It's going to show you when the trend might be running out of steam. And you can see a couple of examples on this chart right here. So let's look at this right here. Let's look at this low right here. You see price made a new low right here. But if you look at the indicator did not make a new low. See how high up the indicator was as opposed to here? So this is just telling you, it's a little bit of a warning sign that, hey, the trend might be running out of steam and it might reverse. And so it's a confirmation indicator. And I'm an Elliott Wave trader, and I can see a 1, 2, 3, 4, 5. This is a perfect 5-wave trend. This 5 is a little bit longer than it normally would be, but I would see this low be put in anyways. I'd be looking to exit this trade just based on the fact that this is a 5-wave trend, and this little wave 5 right here is probably, I'd have to go to a lower time frame. This is the 4-hour chart. But if I went to a lower time frame, I probably could see the 1, 2, 3, 4, 5 within this wave 5, because each one of these impulsive waves down is going to be made up of its own 5 waves. I'm not going to get into an Elliott wave discussion now, but it's just a confirmation indicator, right? So at this point, I'd definitely be looking to get out. Then you go up here. Here's another example. You see this high was put in right here, okay? But look at the indicator. The indicator did not make a new high. See down here, see how low it is versus this high, where it's made a new high. So when they put this high in, you could say, well, even if it goes down, it made a new high, I'm probably going to stay in. Now, if you had stayed in, you would have had some good drawdown, but it would have come back and you wouldn't have made any more money. It went up and pretty much tagged the previous high, and that was it. Again, from an Elliott wave standpoint, I probably would be able to get a good view of that anyways if this was the end of a trend. The end of this move up. This is actually a correction. This actually, to me, looks like a 3-wave correction on a longer time frame. But again, putting aside the Elliott wave discussion, I'm just looking at momentum, okay? And finally, right to the current price, or near current price, you have this low right here on this green candle, okay? And the oscillator made a new low right here, okay? So to me, this says that this downtrend is not over. And indeed, again, from an Elliott wave standpoint, it's not. All right, this is in a wave 5. So I see this as a 1, 2, 3. You get a long 3, which is very, usually what happens. Correction up for 4, and now we go down for 5. And I'm going to see the wave 5 to be about the same length as this wave 1. Okay, so however long this 1 is, which is about 126 pips, I would expect that this is going to be about 126 pips too, so which goes off this chart a little bit. So this is just kind of the beginning of the wave 5. Now, and probably what we'll see is as this price comes down and starts approaching whatever low it's going to make, the oscillator will continue to go up because it's running out of steam. So it's going to put in a new low, but the oscillator probably won't confirm it. And then, of course, that will confirm that if you're in a short, to get out, and that this is a wave 5 that's ending. Okay, so there's 3 examples just on this chart alone. Now, I will also tell you that generally, the higher the time frame, the better the signal you're going to get on these oscillators. So if you're, I don't take any trades really anything below the 1 hour. So if you're trading on a very short time frame below the 1 hour, it may or may not work. But I just don't trade that low because it's just too much noise, and it's, to me, the stress and the risk is not worth it for the small amount of pips on those low time frames. So, and like I said, this is the 4-hour. 4-hour time frame is actually a really nice time frame. And if you're using MetaTrader 5 or multiple time frames, which I do my analysis on a platform that has more time frames, like TradingView or MetaTrader 5, where I can see all the in-between time frames that MetaTrader 4 doesn't offer. So MetaTrader 4, this is all you get right here. MetaTrader 5 in TradingView, you can create any time frame you want, but MetaTrader 5 will have a 2-hour, 3-hour, 5-hour, 6-hour, 8-hour, 12-hour. So for me as an Elliott Wave trader, that's very, very important, because I can't sometimes see the detail that I need to see. A 4 might be too long of a time frame, but a 1 might be too short. I need something in between. But for the purpose of this video, it's fine, because once I'm in a trade, I'm going to be looking, at the bigger picture and the oscillator. So again, basically what I'm saying, guys, is how I'm using this is to trade divergence, okay? And divergence is what I was just showing you, like say up here, where the oscillator makes a new high, the price makes a new high, but the oscillator does not. That means it's diverging, okay? In this case, it's bearish divergence, because the oscillator is not confirming this new high, so it's diverging from the price. Down here we had bullish divergence, right? Price makes a new low, the oscillator does not. The oscillator is going up. This is bullish divergence. All right. And there's also something called hidden divergence too. I'm not going to get into. That's a little bit more complicated. And some people use hidden divergence. I don't. I just use straight up divergence. So because I don't trade on any of this stuff anyways. These are just a confirmation. So I just wanted to point that out in case you guys see this change on my chart. Nobody's ever asked me about the indicator anyways, and I very rarely mention it. I was occasionally mentioning what the CCI was doing on some of my videos, but I'm going to try using this AO just as a confirmation tool. Again, I don't take any trades based off of this whatsoever, which is again why I changed the colors to all neutral. They're just all blue instead of the red and green, because I would never take a trade based on whatever color one of these bars happens to be. That would be foolish, to say the least. But if you use it as a confirmation tool, especially to try to find the end of a trend or the end of a correction, and just looking for divergence, I think there's probably some usefulness. And I like the settings that it comes with. I didn't adjust the settings at all. The only thing I did is change the color. So, and you can do whatever you want with that. So just something to look at, guys. Again, I wouldn't say you cannot use this as an entry or exit tool in terms of getting into a trade, or I guess you could say you could use it for that, because from a divergence standpoint, but I wouldn't have this be the main reason why you take a trade. Okay, use it as a tool to confirm the direction you think, and it's possible it might help you pick at least the short-term top or bottom, based on price momentum. Okay, again, this is measuring the momentum of the price. Again, like right here, the price went up again, but it's running out of steam. You can just think of this high right here. It's running out of steam. The market pushed up, but the oscillator's still down here, it's just running out of steam. And then what happens? Boom, it collapses. Right here, right? Market's trying to push down, 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 but it runs out of steam, and it snaps back to the upside. Okay, and the oscillator confirmed that. Okay, so that's what you use it for, and nothing else, in my opinion. Like I said, I don't keep any indicators on my charts at all. I may draw an occasional trend line, very rarely though. I do use Fibonacci occasionally in my when I measure corrections in Elliott Wave. I might use a Fibonacci to try to estimate when a correction might end. But I can also just use Elliott Wave patterns to figure that out too. But Fibonacci is just a confirming tool, but I don't use it exclusively. So that's why normally you're going to see my charts just plain open like this. I don't cloud it up with any indicators on the main charts where the candles are. If I do draw on a Fibonacci or a trend line, I look at it and then I take it off. So because I need to be able to see unfettered, clean access to the patterns that I'm looking for, because my eyes are trained to look for Elliott Wave patterns and impulsive moves and corrective moves. This is a corrective move. This is an impulsive move. So anyways, guys, so that's it. If you have any questions, let me know. Try it out. Let me know what you guys like to use for indicators, and why. And do you use them for as your primary tool to get in and out of trades, or just a confirming tool like I'm doing. So if you have any questions about Elliott Wave or Fibonacci or how I use that, feel free to ask. So, all right, guys, so that's it. Hope you have a good rest of your Sunday. And should be, like I said, a good trading week coming up. I did make a video yesterday with some of the highlights of what's happening this coming week. So take a look at that, and hopefully I'll get around to making a couple of videos to preview some of those risk events that are coming up. So I'll leave it there, guys. Make sure you like the video, share it, comment, like the channel if you're just finding it for the first time, and I will talk to everybody soon. Thanks.